In July, the Central Bank of Nigeria hiked interest rates to 18.75%. On today's edition of the program, I'll be looking at how monetary policy in Nigeria has fared, and has the Central Bank of Nigeria perhaps lost control of the fight against inflation. All the tools that the CBN has used in the last few years to fight inflation, has it succeeded? How did we even get here that inflation is at 24% now, according to the National Bureau of Statistics, when we had, the good old days now. The good old days when inflation at the time was about 9% in Nigeria just some years ago. How did we get to this point? Those are some of the issues that I'll be looking at on today's edition of the program. Also, perhaps how monetary policy can help support economic growth, because thank goodness we have a finance minister now. We're talking about coordination between monetary policy, fiscal policy. There's industrial policy on one side. There should be trade policy on one side. Do we expect that coordination right now that we have a minister of finance, but of course an acting governor of the Central Bank of Nigeria? Perhaps in the next few months, we'll see a substantive appointment by Mr. President. So those are some of the issues I'll be looking at today on the program. Don't forget to join us on all our social media platforms. You can find us on YouTube, Moneyline with Nancy TV. Don't forget to subscribe. Now let's begin with the business news. The Federation Accounts Allocation Committee, FAC, has disbursed 966.1 billion naira to federal, states, and local governments. The federal government received 374.4 billion naira. State government received 310.67 billion naira. Local governments received 229.409 billion naira. The federal government, through the Minister of Budget and Economic Planning, Abubakar Bagudu, has revealed that the ministry will give special attention to the implementation of the newly approved social protection policy. The United Nations International Children Emergency Fund, UNICEF, has guaranteed the federal government of its commitment to support humanitarian assistance and poverty alleviation in Nigeria with $270 million. UNICEF made the commitment during a visit to the Minister of Humanitarian Affairs and Poverty Alleviation, Dr. Betta Edu. The Organization of Petroleum Exporting Countries, OPEC, has said in its August monthly oil market report that its oil output fell in July. On the decline in Nigeria's crude oil production, OPEC stated that Nigeria's oil output fell from 1.2 to 1.081 million barrels per day in July. The Minister of Transportation, Said Al-Khali, has announced intentions to buy a fleet of electric cars in an effort to improve transportation efficiency and address concerns about fuel prices. This is expected to reduce the carbon footprint as well as contributes to the ease of movement for commuters nationwide. The United Nations Industrial Development Organization, UNIDO, and the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, NACIMA, are on course to strengthen and sustain Nigerian businesses through retention and collaboration for more investments and economic growth in Nigeria. Our correspondent has more.
The United Nations Industrial Development Organization, UNIDO, in collaboration with the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, NACIMA, has organized a dialogue session aimed at strengthening Nigerian businesses through retention and collaboration for more investment and economic growth in Nigeria. The special advisor to President Bola Tinubu on industry, trade and investment, John Wajimogu, during his keynote address stated the need for increased foreign direct investment in Nigeria to enhance economic growth and improve Nigerians' growing population.
In Nigeria, we have two twin problems, in my view. One is we have low levels of FDI for our size of economy. We need more money coming into this space. We need to be growing at high single digits or double digits in order to adequately cater for the needs of a very young and growing population. With President Bola Ahmed Tinubu's Renewed Hope mandate, we can already see things that are being put in place, initiatives that are being implemented in recognizing that you need a stable business environment.
The Acting Comptroller General of Custom, Bashir Adewale Adeniyi, who was represented by Deputy Comptroller General A. Hamizu, said the service is committed to promoting and protecting investments in Nigeria.
We're ready to partner with all relevant stakeholders to ensure that any investment that comes to Nigeria is protected and promoted.
An expert with the United Nations Industrial Development Organization, Stefan Grach, said new investments can help track opportunities in the region.
We work with IBAs to launch new campaigns for investment opportunities. Not primarily greenfield opportunities, the big ones, but investment opportunities linked to indigenous firms.
Speaking in an interview with the press, the president, Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, Otumba Adeleoye, emphasized the need for businesses to thrive for economic advancement.
All the gains we make from exporting here, we'll give it back when we use the same money to buy refined products. So there's really no, just like we can't continue to live on borrowed time. We must find a way to have a sustainable way of doing business in Nigeria.
There is need for tangible and transformative results in investment for the growth of the Nigerian economy.
Statistics South Africa data showed early this Wednesday that South Africa's headline consumer inflation fell more than expected to 4.7% year-on-year in July from 5.4% in June. On a month-on-month basis, consumer inflation was at 0.9% in July compared to 0.2% the previous month. Inflation fell within the central bank's target range of 3.3% to 6% in June for the first time since April 2022, after which the South African Reserve Bank paused its interest rate hikes at its July monetary policy meeting. A cross-section of Nigerians have reacted to the portfolios assigned to the ministers appointed by President Bola Ahmed Tinubu. The ministers have been sworn in and assigned portfolios. The allocation of portfolios have expectedly generated mixed reactions among Nigerians. Take a listen.
Nigeria did what they normally do. So people reacting or myself reacting, I don't think it will count. The appointment they have chosen is their choice because everything they are doing is their choice. It's not the choice of the masses. Everybody, including me, will expect them to work better. But I don't think they have chance to do any work now.
The government did not put the round, putting the round peg in the round hole because the ministers were not put in their proper portfolio. Imagine somebody who read law, a barrister, going to become aviation ministers and space. So there's nothing, I don't think somebody like that can put in his best.
It's like they are recycling the old people and then coming back. Some are former governors, some are former senators. So I don't think we expect much from them because it's the same old school. Are they going to do well? It depends on how our other system works, like the AFCC, ICPC. If they work well, then I think we expect something. But if they don't work well, they will do whatever they like and then go away.
The expectation is high. Number one, starting from tackling insecurity in the country. And also the economy, because there are a lot of hunger in the land. So we are expecting a lot of them now that things is not working, nothing is working. So all the ministers, in fact, they have to do their best to make sure that things work.
Time me, on my own, I suggest prayers for all those people that they are the helm of affairs. Tinubu is a human being. I am a human being. You are a human being. The other man also is a human being. So what are we going to do? It's the will of God. It's the will of God for them to be there. Nobody can object what Mr. President and his cabinet has done. Then we perform by the special grace of God.
Zimbabweans line up to vote this Wednesday, stating that they are hungry for change from relentless economic chaos. But analysts are skeptical that the ruling ZANU-PF party would allow a credible election or any loosening of a strong hold on power. President Emerson Mnangagwa is seeking re-election after a first term during which runaway inflation, currency shortages and sky-high unemployment left many Zimbabweans reliant on dollar remittances from relatives abroad to make ends meet. The National Policy Advocacy Center of the Abuja Chamber of Commerce and Industry, the Nigerian Association of Chambers of Commerce, Industry and Agriculture have organized a round-table discussion in collaboration with the National Pension Commission to dialogue on enhancing private sector participation in pension scheme. Our reporter has more. All right, let's just move ahead as the new leadership of various ministries sets the pace for Nigeria's technological growth and goal of making Nigeria the industrial hub of Africa. The new Minister of Innovation, Science and Technology, Uche Nnaji, has expressed readiness to bridge the gap for an export-driven society in Nigeria.
Uche Nnaji Nwakibe was among the 45 ministers sworn in by President Bola Tinubu from Enugu State, southeast Nigeria. He has been handed the mandate to run the affairs of the Federal Ministry of Innovation, Science and Technology. Uche is a Nigerian politician and a businessman. He was the governorship candidate of the APC in the 2023 governorship election in Enugu State. Uche has served in different capacities, both in state and federal levels. He is coming at a time the nation is in dire need of an alternative source of revenue away from oil. The ministry, which was formerly known as the Ministry of Science and Technology, was renamed by the federal government in August 2021 to Ministry of Science, Technology and Innovation. The aim was to reposition the sector for an innovative agenda that will serve as catalyst for economic growth and development. Some of the major challenges that successive governments have had to deal with were hinged on the implementation of existing policies and getting innovative ideas and products of research and services to the market. Uche's wealth of experience, especially in the private sector, will be significant.
I'm therefore happy to be here with you to achieve these goals and objectives of transforming the fortunes of this great country to a critical activities of the ministry and its affiliated agencies. As a new minister, I am aware of few existing policies and strategic documents of the ministry, in particular, the National Science, Technology, Innovation Policy. Therefore, I expect briefings from the directors and DGs on the implementation of this policy in their respective departments and agencies.
As the new minister set out on this new assignment, industry watchers say renewed strategies must be applied to achieve the desired goal of making Nigeria the industrial hub of Africa. Fumilayo Emopai, AIT News, Abuja.
China's President Xi Jinping and Indian Prime Minister Narendra Modi have arrived in Johannesburg, South Africa for the second day of the BRICS summit. The BRICS' current 5 members, Brazil, Russia, India, China and South Africa, are meeting until Thursday and are due to discuss expansion of the organization, which aims to offset the perceived hegemony of the US-led West in global affairs. India has reservations about accepting more members. Let's quickly take you through the markets now. Analysis of Tuesday's stock market activities indicated that the Nigerian exchange maintained its bull run, with the all-share index up by about 0.44% to close at 65,488 points. Sustained buying interest in Boa Foods, Guinness and Dangote Sugar offset losses, improving year-to-date return of the NGX to 27.78%, while the market cap ended at 35.84 trillion naira. The most actively traded stocks in terms of volume and value are Transcorp as well as Access Corp. Now, if we move over to other markets across the world, starting from the United States, overnight in the U.S., the S&P 500 fell 0.3%, weighed by concerns over rising Treasury yields and ahead of key speech from Federal Reserve Chair Jerome Powell later this week, as well as declines in banking and retail shares. For European markets, this morning they were up in early trade, with attention focused on earnings and central bank comments in the United States. So everyone is watching what the U.S. will say. In the Asian Pacific region, markets were mixed this Wednesday as investors access private business activity, surveys from Australia and Japan, as well as inflation figures from Singapore. For all, its prices eased this Wednesday morning, weighed down by fears that U.S. interest rates could stay higher for longer and economic growth could slow further and hurt fuel demand. For Brent crude, it dipped to about $83.86 a barrel, while U.S. WTI crude was down at $79.56 a barrel. Gold prices gained in early trade after a slight pullback in U.S. dollar and Treasury bills underpinned the bullion above a key $1,900 US level as investors await clues from major central bankers on interest rate trajectory. Spot gold remained at $1,902.63 per ounce, drifting further away from the 5-month low hit last week. All right, let's quickly go back to the reports that we had to bring you earlier, talking about the collaboration between Abuja Chamber of Commerce as well as the National Policy Advocacy Center, talking about the pension industry in Nigeria. Let's take that report.
The National Policy Advocacy Center of the Abuja Chamber of Commerce and Industry, National Association of Chambers of Commerce, Industry and Agriculture, has organized a roundtable discussion in collaboration with the National Pension Commission to dialogue on enhancing private sector participation in pension scheme. The president, Abuja Chamber of Commerce and Industry, Mutaba Abubakar, during his opening remarks said it has become pertinent to review the progress and challenges of the pension scheme in order to foster development in Nigeria.
The industry really has come a long way, but there is a serious challenge, and there are two issues: the macro pension and the inflation. Most people that are investing their money, saving their money in the pension industry, they are very worried because the industry itself is generating so much savings, so much money that can be channeled into areas of investment to develop the country.
The president, Nigeria Labour Congress, Joe Ajero, said the country's pension system has failed to address the fears of Nigerian workers.
The system today, as it is, does not address completely or to a large extent the fears of Nigerian workers. That is the reality. And that is why some of us have concluded that the pension scheme in Nigeria is parasitic with all the Buharinomics and the Emiloconomics and all of those. The value crashed. Perhaps somebody that could have, if he had used the 8 million at that particular point in time, he would have been a rich rice merchant, having a very big warehouse with a whole lot of bags of rice, selling them and making money.
Speaking on the achievement, the head of relationship management of NPLC Pension, Idowu Muslim, mentioned the various efforts to engage industries to create more jobs for Nigerians.
We have only been able to cover about 12.5% of the working population using the 80 million. If we go by the figure 50 million, you understand, and we have only captured 10 million, it means we still have 40 million people to poverty.
There is need for a more inclusive and worker-friendly pension system and strengthen its inclusiveness in Nigeria.
All right, let's quickly take a break. And when we return, my guest will be joining me here, Dr. Hassan Mahmood, the Director of Monetary Policy Department at the Central Bank of Nigeria, to give me answers to the questions that I asked at the beginning of this program. We will be back after this break.
And all we've been doing is hiking up the rates, and it looks as if it hasn't made much of a difference as far as inflation is concerned. The first thing I'd like to highlight is it has made quite a lot of difference, and I believe in previous MPCs we had indicated and shown that every time we have had a rate increase, it has actually moderated the rate of inflation. But that's not all that we've been doing. And during this MPC, we had quite a lot of time talking about inflation, talking about the various tools and mechanisms that we could use to manage inflation. We agreed that one of the key challenges now was the liquidity overhang, and we needed to look at the various tools we had. As a matter of fact, in the communique, you would have noticed that we made reference to that same fact. So in addition to interest rate hikes, we've also come up with various ways to tighten the liquidity, because we believe that if the liquidity surfeit actually runs across not just inflation, but also has some impact on the exchange rate and other parts of the economy. So I can confirm that it is not only rate change that we're looking at to moderate inflation. We're looking at every tool in the box that would help us reduce liquidity and achieve any rates. We believe that we need to encourage the markets to be more efficient and to be more effective, and that takes a bit of time. Some of the volatility you've seen over the period has been driven by that same fact that the market needs to find its level, and also the reality that there's pent-up demand, which current supply may not be sufficient for. And as we ease and satisfy the pent-up demand, we begin to see a more efficient market that runs. But you also need to understand that the dynamics of pricing in the market, and we feel we should actually stop calling it the I&E, because it is now much more than the I&E. For us, it's a market where everybody and anybody through the licensed institutions can participate.
All right, welcome back to the program. Dr. Hassan Mahmoud joins me here. He's the Director of Monetary Policy Department at the Central Bank of Nigeria. Dr. Mahmoud, good morning and thank you for joining us.
Good morning. Thank you for having me.
You're welcome. Let's dive straight in, and I will start with a question around. I know that the Apex Bank, you and your colleagues must have seen what has been in the media since yesterday about JP Morgan's write-up estimates that FX reserves is at $3.7 billion. So I want us to start on that premise. Is that true? How have we gotten there? Because even on your website, it's over $30 billion that is in FX. But I also looked at your financial statements last week. You have some FX forwards. You also have from Goldman Sachs as well, as that's about $7.5 billion and all of that. So I would like an explanation for that, because many Nigerians are really agitated. Agitated is even a soft word. Are very angry right now how we got there. So let's start from that.
Thank you very much. We also read the JP Morgan numbers. In-house, we didn't panic over that. That's not the first time we're seeing people, institutions reeling out numbers. They must have their intention for doing that, whether to rouse market sentiment, whether to mislead the public. But Central Bank has, as much as possible, tried to be transparent. Like you mentioned, we released our financial statements for how many years on the public domain. You're saying that. What I would say about those numbers is just funny, in the sense that, number one, reserves, like any account balance, is a flow. There are changes that go on within it at any particular time. Number two, even if you have outstanding liabilities, you don't mark the outstanding liabilities to market on a day and say this is your net balance. I can have 20 million in my account, but I'm owing someone maybe 13 million that is supposed to be paid in 2027. You can't come in 2023 and say, oh, if I remove that 13 million, your money is 7 million, you're having 7 million. I'm not having 7 million, I'm having 20 million. Because before I took a facility of 13 million, I know in the next 3 years, I'll get 17 million, so I can pay you back. But for you to come and tell me that, no, your balance is 7 million, and you can't pay back in 3 years, it's just kind of, putting it out of context. Yes, there are liabilities, or encumbrances to the reserve, which is natural, which is normal. The central bank built the reserve to defend the naira in terms of the value of the naira to other currencies. Of that. Those reserves, close to 80% of it is central bank's funds. When the federal government or the oil sector, oil export receipts come to Nigeria, it comes through the central bank. The central bank monetizes that to naira, and the federal government spends the naira in the implementation of its budget. So that dollar component sits with the central bank. The purpose of that dollar component, one, is to build the confidence of the international community in the capability of central bank to meet its trade commitments. So you will see measurements around what months of import, whether goods and services or goods only, can your reserve covers. That gives some confidence to investors that are trading with Nigerian investors in terms of import and export. Number two, in the event that, for example, that we're having a float managed exchange rate regime, in the event that the prices or the value of your currency is significantly depreciating or appreciating or whatever direction it is going, the central bank has the firepower to intervene in the market such that you bring the price to your expected or optimal calculated equilibrium, optimal equilibrium rate. So that is what the reserve is meant for. Reserve is not meant for just trading or whatever. In the event that there are also shortfalls in the build-up of those reserves, you can take a swap, you can do all other engagement that is legally allowed by the CBN Act over the short period of time. The exchange rates, it's, as we've mentioned several times, are also part of the tools to address price stability, including leading to inflation and all that. So it is a tool that we can comfortably use to, one, build investors' confidence in the Nigerian economy, also builds the sovereign confidence in terms of our exposures to multilaterals and other. Federal government is owing, it's supposed to pay services debt and all that. So people do all those calculations and said, okay, for example, we have some government loans that are for 10 years, over a particular 10 years period, and there is annual service charges that you're supposed to pay for, interest that you're supposed to pay for those, amortize those loans. If you come today and sum up the entire facility, maybe 20 billion, and you say, okay, federal government is owing 20 billion for the last 10 years, so if you remove that 20 billion from 33 billion, you have only 3 billion to service the debt. That is wrong, because there are going to be inflows. Federal government is going to earn some monies. So it's I don't know how they did their calculation. I don't have any information about that, but we also saw those numbers that came out. Central Bank doesn't want to be just responding to everything that comes, everything we'll go to the public. No, this is a lie.
Do you think that not responding could also worsen the matter?
Well, those that need to know.
And people will take that.
You see,
those that need to know.
The gullible public may be taken, by surprise, shock. The real investors know the numbers. The real investors, the top high net worth investors know the numbers. To be sincere with you.
But JP Morgan is not a small boy.
Who said it in JP Morgan? Is it the CEO of JP Morgan?
JP Morgan is a leading investment
it's just like
firm.
me. Somebody just speak something now and said Hassan Mahmoud said, and he said, oh, Central Bank of Nigeria said.
People will take you seriously.
But those are two different things, and it depends on the context of where that was also said. So we have the numbers there. The central bank reserves are on our banknet. Yes, it is the figure you see today may not be exactly to the last decimal point, but you have that picture that you are seeing there. We have 33 billion, there's IMF facility there, the RSI that we got, the SDR is also there. You have other, the JP Morgan numbers that you mentioned, they're all there. But we have forwards, but what we're saying is that you don't mark them to market on day one or any particular day. Yes, it's an assessment period that, okay, in the event of a crisis, like a stress test, it's like taking the stress test results as actual. Stress test results are supposed to give you worst case scenario. And when the worst case scenario has not crystallized, you will not use that as the actual number. We do stress tests for banks and say that in the event that oil prices go down from now maybe $80 a barrel to $20 a barrel, what proportion of Nigerian banks are exposed to the oil sector? Maybe you say total credit exposure of the banking industry is about 30% of that credit is to the oil and gas sector. So if oil price goes to $20 a barrel, 7 banks will fail because their capital adequacy ratios and other NPLs will blow up to a certain number, capital will crash to, so they will not be able to withstand that exposure. That's a stress test. Dollar is not at $20 a barrel today. So you can't say as at today, 7 banks will fail. But as at next month, if dollar goes to this, if oil prices crash to this, because of this proportion of a particular bank exposure to this sector, the borrowers in that sector will not be able to pay because their inflows will not meet that. So this will all happen to the bank. But this has not crystallized. So it is important you do the stress test. It gives you ability to build resilience and build buffers in case the shock crystallizes or signals of the shock crystallizes. But it is not to use that as absolute number to say that this is what is the situation.
Dr. Mahmoud, as you're talking, I had to go to your website now, and I'm seeing as at the 21st of August, foreign exchange reserves, $33.77 billion, that's gross, liquid $33 billion. So are you saying that we should discard, of course, what JP Morgan is saying? So if for someone like me, or just like you said earlier, for those that know,
yes.
But we also have to know when we see the books and when we see those figures. Okay. So should we take this or should we take that of JP Morgan? Should we totally discard that? Because that has actually raised the question also of transparency of the Apex Bank. You also mentioned earlier, and I want you to add that, mentioned earlier the financial statements. A lot of people, Nigerians, are really livid with you and your colleagues at this time in terms of why are we getting 7 years financial statements now?
Now, in terms of, you see, I've seen some videos, even though there are political issues and stuff like that, where you see leaders, influential people saying that Africa must tell their story. We must fly our flag. We don't expect others to fly our flags for us. If the Central Bank of Nigeria publishes something on its website, we do MPCs, we make statements and stuff like that, and a private firm is giving you a number, and you feel more comfortable accepting the private firm's number as more credible than your own indigenous institutions. We're not saying that don't compare numbers. We're not saying that, but if we're so gullible to get to that level that, okay, no, the president of Nigeria said this, but one journalist on BBC said this, so I believe the BBC journalist than my own president. It's ridiculous. So it gets to a level that we know we have to tell our own stories. Yourself, you have access to Central Bank, you have access to all our directors. You can come to the bank. Come, I got these numbers. What is this? What is this? It will be more credible, me hearing it from you, from other channels, domestic firms, that yes, this number can work. This is what we found out. It's even more credible than me telling you, because that one is your own, assessment. There's freedom of information that you can come to the bank and get those information. So I think it's also ridiculous for us to now start coming to the public domain, the central bank governor or deputy governors coming to be hacking on issues by JP Morgan. I don't even know who said it in JP Morgan. I don't know the status of the person that said that in JP Morgan. JP Morgan is also some of investment bank that manages some of our reserves. So I don't want us to get to that level that we will now be ridiculing our own self as a sovereign, as a country, because a private investor that has its own motive for giving those numbers. It could also be that the numbers were also quoted out of context. I don't want to go into those debates. Like I gave you an example that if you mark to market today, all our liabilities will be this. It's true. But are those liabilities or obligations due today, as at the time you are marking them to market? It's a different ballgame. So it depends on the context on which you look at that. Secondly, you see, of all the monetary policy decisions that we take, more than 60% of them are due to responses to external shocks or external developments, oil price, normalization in the U.S., all that, currency crisis, bank failure in advanced economies. And the solution to that, which I've also mentioned before you, is that we must consolidate domestically. We must become more competitive and efficient domestically, including our markets, such that our resilience level will be a lot higher. And I gave an example of Russia is in crisis, is in war with another country. But as we talk to you today, the macroeconomic parameters of Russia has not collapsed because the resilience level is extremely high. And anything that happens to oil price today, by next month, Nigeria is already crying. But there are other alternatives to oil price. The crisis you are seeing in the FX market was because of the shortage or the dry up of supply of FX from oil export proceeds for a long period of time. Central bank does not print dollars. The central bank does not have any instrument that earns, apart from the income we earn from our reserves that we put in the ones that will be in dollars or other currencies. There's no where central bank can get dollars. The dollars that we're using in that bank is the inflows that come to the state, the private sector or whatever, that's sold to the central bank, and that one central bank gives the naira equivalent for domestic sector uses, then keep that to defend the naira. So if we have been having maybe like 4 billion monthly, like we used to have 3 billion from NNPC, from other oil export, from other export within the economy over the years. So we are talking of a reserve of 60, 70 billion. Who worry about exchange rate? Even the foreign investors will be seeing those numbers. So it is within those kind of buckets. I want, people, particularly the people we call public analysts, that will come and give numbers to the public to analyze, put things in context. The central bank, even taking a swap or doing some of these things, is because of the paucity of the FX. If you have enough FX, you don't need to do swap with anybody. It was also because of our exposure to most of our importers importing from China and all that. That's why we do the renminbi naira swaps, and that is also one-sided in the sense that we import more than we export. So if you don't build these domestic sectors and strengthen your domestic economy in terms of, if you depreciate your naira, is to drive export. So if you don't have the exports to drive, then your depreciation of naira will just go to your inflation.
So that's what we're seeing now?
Yes, that's what we're seeing. So you see, because there's a pass-through, that you get from from those development. So while we are saying, yes, structural factors are also contributing to inflation, there are also other monetary factors that are also playing a role. So the emphasis I'm just trying to put in place here is that we need to always look inwards. You remember also, if you talk of JP Morgan, IMF also came up and said that the naira, yes, is the unification of the exchange rate. It's very good. Let it float. And the question I ask personally is, let the naira float for who? For your foreign investors to come and trade in the currencies, to give short-term loans of less than 1 year that cannot develop your economy, or to come and deepen the market so that those that want to buy and sell in the market can, have funds to play with in that market and play with asset prices, or you want to bring in inflows that will develop your economy in the long run. So if you don't have those objectives, rather than looking at your own domestic, who is suffering the high inflation now? Is it foreign investors or Nigerians? So if you are depreciating and it is passing through to these numbers, and the foreign investors are having higher margin, because of the investors they are coming in, what are those foreign investment financing? That's the question we should ask. Is it to deepen the financial market, to deepen the capital market, or to finance trade, to finance export, to finance capital infrastructure development? Those funds are not for 1 year. Those funds are going to stay for 10, 7 years. You don't get them through portfolio investors. You need FDIs. So we need, Nancy, to be looking inwards. We need to think our own way. We need to have a good mastery of our own economy and be able to take our own decisions in such a way that it benefits Nigerians first, before it benefits the rest of the world.
Okay, now talking about mastery of our own economy, there's a new finance minister now. And at the last MPC meeting, the acting governor, Mr. Shonubi, in the communique which I have here, also mentioned about you and your colleagues have always said this all the time. At every MPC, there must be coordination and collaboration between monetary policy and fiscal policy. What do you think now about where coordination should go? Because for you are the secretary of even the MPC, and I'm sure you are the one that, perhaps the DG, Deputy Governor of Monetary Policy, Dr. Obiora, works on this every time you have your MPC. What is coordination? What does coordination mean for the monetary policy? Now we have a finance minister. What will that coordination mean? And let me also join when President Tinubu did talk about monetary policy needs thorough house cleaning. After that July MPC meeting, you raised interest rate to 18.75%. So in the context of all of this, answer these questions? Coordination and thorough cleaning of monetary policy.
Yeah, I'll start with the fact that one, we have one Nigeria, and all government agencies are working towards the goal of the Nigerian project, like some people call it. The president has his agenda, so also does his party have an agenda. The president has also made promises. These are the things I want to do. It's now left for the technocrats, the ministers, the governors of central bank, the heads of parastatals, to go and sit down and work towards the achievement of those objectives. Because the president or the party made those promises because they saw the problems, the challenges of the economy. And people voted them in because they think these guys will come and solve these problems. So all of us are supposed to work towards achieving that, not diversionary. We don't work in silos. The coordination where central bank should not just be reactionary to fiscal behavior. Central bank or monetary authorities and fiscal authorities should be able to sit together and let's plan.
Do you think that's what you've been doing? You've been reactionary? Perhaps because you had a seemingly lackadaisical attitude from fiscal policies in the past administration? I don't want to put you on the spot, but of course, they are there clearly for everyone to see.
The point is this.
That's why I'm asking the question, what kind of coordination exactly?
I'll give you a very good example. When there's a shock to the economy, like when we have the COVID, government will have to spend substantially, to drive growth, to inject, employment, health, and whatever. Those excess injection into the economy, which is beyond the absorptive capacity of the production process of the economy, will mean that those funds, if they are not backed by commensurate output, such as supply and production, will become inflationary. So what central bank does is, it's like when they do FAC. As the monies are going in, central bank mobs from the banking system so that they don't become inflationary. What we are saying is that we do MTEF, medium-term
expenditure framework.
Yes, we did the central bank, monetary authorities, other agencies sit down with the fiscal. We plan that, okay, the single-digit inflation rate target you have is from the federal government. It's not central bank. So I want to have this single-digit inflation. Now, central bank, what we're doing monetary targeting monetary policy framework. What volume of monetary base will you require to achieve this? What volume of credit growth will you require? So you agree, just like they do the national budget. So you agree on those terms and work towards that. If the federal government is going to be spending excessively, we will make sure that those spendings are targeted at sectors that will immediately boost production. And such productions will now, boost the supply side of the equation, and you don't see what we call demand pull inflation. So the point is that there needs to be coordinated planning. You have the National Economic, this one you have governors and all. Yes. Council. Yeah. So Council. in those kind of places, the central monetary authority should be able to say, now the fiscal authority or the government or the executive have these plans. These are the implications. Okay, if these are the implications and we want to achieve this, what are the ways that we can ameliorate these challenges to be able to smoothly engage this? We have injected so much money into the economy through those stimulus packages, but this is bringing huge inflation to us now. So it's wiping out those gains. The welfare gain that you get, or the income gain, the disposable income is narrowing because inflation number, which is the denominator, is pulling down those real disposable income. So the coordination is, there must be synergies in our policy and approaches. There must be a lot of consultation and collaboration towards an ultimate goal that should be common to all of us and understood. And there must also be compromises. So if you said, okay, we want to do this, these are the expected, what we call opportunity cost that will go with it. How do you manage it? And that's what we call economic stabilizers, just like they are doing subsidy now, and they're now given palliative or stabilizers to cushion those effects. So those things must be done harmoniously among government players so that you have, everybody knows where we're going in the game. Okay, so not in silos, and you do this. If you do this, I'm going to do this to counter the effect of this. But we are looking at the generality of the people, the economy, the populace. That is what should be our target.
Okay, so if you have, within the context of what you've said now, that of course, because of the pandemic and the economic challenges we've had in the past 8 years, we entered a recession 2 times in 8 years during President Buhari's time. We needed cash or funds stimulation. So if you're saying because of that, we're also seeing inflation, how would you now explain to me that what we have seen that has caused inflation, and now interest rate is at 18.75%, and there are still hopes that you will continue to increase because you all are still hawks now, you are not doves yet. If you are still targeting that you will continue to raise interest rates, yet inflation is still rising, 24% for July from NBS.
Yes.
We don't know what August will be. You have a next MPC meeting in next month.
Yes.
So how would you now just oppose that? Because printed monies, ways and means, perhaps 27 trillion naira, rising interest rates, inflation is still high. It is not working.
Now.
So it's seeming that perhaps the central bank has lost its control of price stability, and even FX on one point, which you stated earlier, which you alluded to earlier.
It's very important the way you put the picture. That means there are various targets. There should be multiple objectives. Multiple objectives could be conflicting. And where they are conflicting, there are going to be trade-offs. Now, what is important is how do you maximize the benefits of the trade-offs? And the Bretton Woods institutions will tell you that monetary policy objectives should be singular. If you don't have multiple monetary policy objectives, if it's price stability, that should be your only function, price stability. But in a developing or emerging or market frontier economy, those kind of theoretical postulations will have some limitations in the sense that, and like I said, ordinarily, central bank should look at inflation, leave exchange rate, leave interest rates. Let them play their way, just face what you are supposed to face. But when you have instances of market failure means that the market efficiency, price recovery mechanism is a bit weak, so you don't get, speculations, arbitrage are still very, market institutions are still very weak. You have market failure, you have institutions of state failure, some issues around securities and all that. So if you have those anomalies within your system, you need to provide measures within your ultimate objectives to address those challenges. And that will also mean why sometimes you see central bank going quasi-fiscal. Yes, we have price stabilization mandate, but you see that supply side factors are playing a major role. We are not supposed to be supply side factors. Supply side factors are structural factors that are supposed to be done by the state or the private investors within the state. But if that sector is not catching up enough with the frequency of increases in inflation numbers are measured month on month. If GDP numbers are quarterly or annually, even if you invest in agriculture, it takes some months before you see the outcome. Manufacturing, the same thing, even years. So you should be able to find stabilizers within the economy to drive those supply rigidities, to be able to boost production and bring down particularly food prices. Now, the complexity of this is what is causing largely the confusions we have. You've also had in some of your programs I've seen, you are driving down inflation, while you are trying to break down inflation while your GDP is already going down, unemployment is rising and all that. So
stagflation.
Yes, so you have multiple factors playing simultaneously, and you need to have, and that's why I said you need to understand your domestic economy very well and deal with it and come to a level where you can compete favorably, competitively, globally, before you start diving into that space or start listening to the dictates of that place. Countries are now, they are saying there's deglobalization. You saw the meeting of BRICS, what they are coming up with. You see within our own sub-regions, even within the US, there are protectionism and all that coming in. It's because everybody is exposed to global shocks and want to conceal, or protect their economies and improve their resilience to those shocks.
Okay, I think, Dr. Mahmoud, we'll leave it at that. I'm really shocked as at time is fast spent when I'm still beginning to get into the mood of the interview. But we'll continue on another day. Thank you for coming today. All right, I've been speaking with Dr. Hassan Mahmoud, who is the Director of Monetary Policy Department at the Central Bank of Nigeria. You've heard it from him. We've raised issues about the FX rate. We've raised issues about FX reserves as well as inflation. We'll continue another time. Please join me again tomorrow, same time on the station. I am Nancy Naji. Be the best you can be and be the change that you want to see. Bye now.